Okay, very good morning. It is Monday 21st of May. Hope everyone had an excellent weekend. Quick look at the topics for this morning. Update in regard to the trade war situation between the US and China. We're going to have a look at a few things UK Brexit related and a few associated articles at the weekend. And then look at the week ahead before I hand you over to Sam to look at the charts a bit more technically. So again, I'll talk more about the news. Sam will talk more about the setups and what he's got on the radar from a levels point of view. But kicking things off, obviously you can see from the open this morning, you've had a significant gap up in the the US equity futures. Let's start from last night. You can see here centre right, the S&P, quite a firm gap up. European equities, you'll notice my centre left chart, I've changed that. The DAX, Deutsche Börse is actually closed today. It's a partial holiday across a couple of the European countries, and that does include Germany, Switzerland, Canada as well. Later is also closed today. So we've got the FTSE here in the left centre, and as you can see this morning, this is a daily chart, and Prince Harry, Meghan have managed to bump the FTSE above those previous highs, so new all-time highs this morning for the FTSE 100. Although maybe not such a happy Monday morning for Theresa May, and we'll get to that in a second. But the overall predominant story here, which has led to generally positive session overnight in Asia, equities there following the US futures sentiment moving higher. Gold is lower, about $9 already, so fairly significant downward trend materializing from overnight. We've already broken through S1 to find some support at S2. And the US 10-year, although it is rising back to basically flat on the session here, again, it did gap down. It kind of did move back higher overnight in Asia before just edging back down to pivot as being a support point thereafter. But the main story and focus here has been the one about what was and seemed like, at least last week, a developing story of renewed tensions on the trade front. However, following on those talks from the Chinese officials who were in Washington last week, they appear to have come to a truce. However, obviously a lot of the articles here picking the bones already about how long this particular truce will last. Let me just pop this into the window here. This is the headline. So here we have Stephen Mnuchin, the Treasury Secretary, saying that they're putting the trade war on hold amid these talks. So right now, he said that we've agreed to put the tariffs on hold while we execute the framework. This does come after some of the news that we had last week, where China and the US agreed to substantially reduce the US trade deficit in goods with China. This is when we were hearing those articles talking about a potential Beijing caving into demands for a $200 billion annual reduction in a goods shortfall. Now that number hasn't been confirmed, but obviously it would be an incredibly large concession there on behalf of the Chinese. Now, timing is obviously quite key, because you'll know that in just under a month's time, well actually less than that, June 12th is when the US officials are set to meet in a historical summit with North Korean leader Kim Jong-un. And obviously a few people looking at this renewed turn towards being a little bit more friendly and at least a temporary truce is to have China on board, because it is China whose cooperation is needed to help facilitate this kind of North Korean dialogue with the West. The question mark is how long will the US remain calm on this issue, given that once North Korean summit passes, obviously we've got the midterm elections coming up in the US towards the end of the year. When does it start to ratchet up again so that Trump starts to appease the kind of, I guess, anti-China rhetoric that resonates with the kind of voters in the working class states like Ohio, Pennsylvania, so on and so forth. So for the moment, you've got to take it for what it is. The kind of trade talk has dissipated, therefore some degree of risk on has been seen. And at least in the near term, this is a positive development, but a lot of people looking at this longer term as more of just kind of a preset planning around the North Korean issue, which will be coming up in mid-June, and then how long does it revert back to type of calling China a manipulator and so on and so forth, like what we saw in the run into the 2016 election. Does that re-emerge later on in the year? So that's the kind of broader assessment, I think, of what's going on there. The one thing that we have been seeing, of course, is in the FX markets, you've been seeing euro-dollar and cable coming under concerted pressure now. Not just this morning, which it is the case, they are both trading a little heavy, and it really is because of persistent dollar strength. The dollar now, as you can see from this statistic, it's posted, this is the Bloomberg Dollar Spot Index weekly change. It's posted a 5th week of gains for the first time since 2015, albeit the week prior to last was only just a fraction. But again, the first time in a while. And the Dixie this morning is back up about 1/3 of 1%, as it reacts to this development that's happened from that news story we just discussed. A similar front, euro as well, has obviously been subject to some political uncertainty, and really there's no let up in the Italian asset movement. I wouldn't say this is moving the broader multi-asset classes, but certainly as a consideration for some of the euro weakness in the context of this emerging dollar strength, is that there's the Italian sovereign continues to remain under some pressure. The prospect of meeting between the populist coalition partners and the president bringing the anti-establishment Five Star and League parties closer to a government. So this continues to be very much in the forefront, just because of the wide-ranging and detailed manifestos that includes calls for an overhaul of EU fiscal monetary rules. You know, it's that type of side of things that tends to make investors rather nervous, and consequently sees Italian yields rise and quite aggressive sell-offs in BTPs, which is the local Italian bond. Otherwise, going back to other stories, there's been a bit of attention on this one in the Sunday Times. Not sure if you caught that, but I just wanted to have a quick chat about a few things that are developing here in the UK, and I think you need to put this into a bit of context. That, you know, some of this isn't particularly new, but certainly I think that there is the beginning of a potential political situation that could occur in the months ahead. So not so much something that would make me want to just actively want to get heavy short the pound right now, but it does seem as though Theresa May's leadership of the Conservative Party is getting ever more difficult. Now, what the Sunday Times were essentially speculating at the weekend was this: Tory MPs are preparing for a snap autumn election as Theresa May hit by a Brexit deadlock. So some have spoken to their local party associations asking to be readopted as prospective parliamentary candidates in readiness for an autumn election. This, of course, comes after what we've seen more recently about this customs union issue, which is a complete stalemate at the moment. And they failed to find a real breakthrough in talks. So what I wanted to do was have a quick look at the situation here politically, and there's a few stats that are probably worth noting just to get you up to speed on. And that is, what is the UK's current sentiment around Brexit? You know, was the EU referendum a decision that was made to leave the EU right or wrong? Now, obviously, we can only put a limited amount of trust into polls, because polls, as per they did in the snap election that we had more recently, got it wrong. They often do. But YouGov, one of the main kind of pollsters, their latest YouGov Brexit tracker has wrong to leave the EU. Lead has been down by 1. I think it did get up to a couple of percentage points before, 3 to 4. But actually it's about even at the moment. So those people surveyed to get a sentiment reading across the country, you know, if we were to have another EU referendum, it's about even, is what the polls are saying. Some other things are, the problem is Jeremy Corbyn remains as unpopular as ever. Obviously he had an issue several weeks ago about his ability to deal with the anti-Semitism and his response to that, which severely hampered him in some gains that he were making in these polls. But at the moment, Vince Cable and Theresa May still look far more favourable by the public than that of Jeremy Corbyn as Prime Minister. So then, what is the latest if we were, as per the Sunday Times, which was suggesting a potential snap election in autumn? What is the current sentiment if we were to have a snap election today? And actually, the Tories have got a 4-point lead, is what the latest opinion poll for the Observer, which came out on the weekend, suggests. And again, Labour were actually edging in the lead all the way up until that kind of PR blunder for Corbyn about 7-8 weeks ago. So actually through, although Theresa May obviously has come under some criticism about her ability to deal with the customs union issue, she's still seen more popular as a Prime Minister, at least a better person to manage the country, and the Conservative Party still has a lead at this point. But again, I guess the caveat, this is only polls, don't forget. The other thing that I thought was quite interesting from a statistic was that 91 constituents have majorities of less than 5%. And obviously, when you're monitoring a political event, particularly in the UK, you know, if we go back to the EU referendum, I remember one of the things that you would do was that any area or local constituent that was within a 5% margin is typically seen as someone who has the potential to be a swing seat or a swing area. And 91 is particularly high. That means that, you know, they're on the cusp of being turned one way or the other, which, you know, is or does hold some significance. So if there were a snap election, it's very much up in the air of what that would actually result in. Looking at the actual calendar, I mean, just going to quickly briefly run over today, but really I want to stick with the UK because there's a couple of interesting things coming out this week. So for today, as I said, you've got quite a light volume day because most of Germany are out of the market. Bund futures are open, but the Deutsche Börse is closed, so there's no DAX trade, but there is Bund trade. But consequently, European volumes might be a touch lighter. But in terms of the economic schedule, you can see that basically there's nothing of economic data significance coming out. The National Activity Index coming out of the US at 130 really is largely insignificant. The thing I'd be more interested in actually is on the speaker front, but even with that being said, most of the important speakers are not coming on till later, that being Fed's Bostic, a voter of a dovish-leaning stance, speaking at 5:15, Fed's Harker later on into the evening, with Fed's Kashkari much later towards midnight. But sticking with the UK theme, because this is the weekly calendar, and tomorrow you get public finance data from the UK, but Wednesday is probably the most significant because Wednesday you get the latest CPI readings, and if you remember with CPI, this is what we have been seeing, is after peaking in November at 3.1%, we've seen a dramatic fall in year-on-year UK CPI to the point of which this was one of the key metrics which turned the Bank of England so dovish and led to them not hiking where that was priced in almost fully, only about a month or two ahead of that actual last Bank of England interest rate decision. So the inflation reading is going to be very key. And actually, just on that note, I did see quite an interesting comment out of Deutsche Bank. So just to quickly run through, they said the key driver for the softer print in CPI, because some are looking for a continuation of this trend to materialise, albeit by a smaller drop. They're saying that the key driver for a softer print in CPI is mainly due to base effects in the service basket, which we'll expect will weigh on overall price growth. If you look back on a year-on-year basis, so you've got February, March and April is the number we're going to be looking out for. The April of last year we were tracking up at about 2.7, 2.9%. So on a year-on-year comparison we are quite considerably lower now than where we were at that point. However, there are quite interestingly three effects that they say could lead to a potential upside surprise in the UK CPI data this week. Firstly, they say that sugar tax levy comes into effect. Now, I thought this was quite interesting because the Bank of England expects this to add up to a 0.1% to the April CPI print. although those at Deutsche expect it to be a slightly softer amount. So again, it's a kind of a one-off item, if you like, that sugar tax levy coming in. How much of an impact does that have to the upside for prices? Secondly, April will see the first of many energy price hikes from the big 6 energy retailers as well. There does tend to be a reflection of this into the CPI calculation. However, Deutsche does say the timing of the inflation surveys may or may not filter into the data this specific month, so it's a yet to be seen. And then lastly, we could also see a slightly larger April effect to price rises as contracts linked to RPI earlier in the year may see a more material increase in price inflation relative to the last financial year. So there are a couple of things there which could result in, I'm not talking about a spike back higher in inflation, but more a relative constant level rather than the continuation of a decline of what the consensus is at the moment. So just some quite interesting snippets there from Deutsche Bank. Going back on the calendar, so you've got public finance data on Tuesday, you've got UK CPI on Wednesday, and then you get UK retail sales on Thursday. So again, pretty big week, not just with the political headlines that are coming out, but on this data front. Now from the retail sales report, obviously Q1, the end of, was quite heavily impeded by cold temperatures, the snowfall, the beast from the east, and so on and so forth, which did have a material impact on shoppers' abilities to hit the high street, and that did translate into poorer performance in retail sales. Now we're looking at April data. Now what's quite interesting from an economics point of view is you can look at some of the lesser significant retail related indicators that have come out for April. And let me just give you a quick flavour. April's BRC sales monitor reported a contraction in sales, which was minus 4.2% year on year, while footfall on the high street shrunk by 4.9% year on year. Equally, this week's or last week's Visa Consumer Index also pointed to a steady contraction in sales as the index dropped 4.2%. So the indicators, these lesser significant ones, but do culminate into something more meaningful to give you a flavour of the month and how it performed, have all been generally quite weak. So that's going to be interesting to see. You know, do we get higher inflation, maybe because some of these one-off adjustments in the context of lower retail sales? If that happens, we've kind of reverted back to where we were a few months ago with this threat of, do we turn back into real negative wage growth again, which would be quite concerning. Other than that, for the week, just to wrap things up, and I'll hand you over to Sam. Other things of significance are you'll see a number of Fed speakers. Now, definitely I would be watching these with some interest, but are we anywhere near a kind of crucial pivot point for the Fed? Well, I'd say maybe not so much. I think people are pretty comfortable with the fact that they're going to hike next month, and basically the trajectory of rates thereafter in the dot plots are not going to see too much change. The fear of them getting ultra kind of hawkish, I think, has dissipated slightly, but still we've got Monday, as I mentioned, Bostik, Harker, Kashkari. There's actually a bit of a gap on Tuesday, but then we go further forward. You've got the FOMC minutes are coming out this week. You've then got more Fed speakers, Dudley, Harker coming on Thursday. You've got Powell, Kaplan speaking on Friday. So some quite interesting things just to be aware of there. Okay, that's it from me. I just want Sam to give a thorough rundown on the tech side, so I'm going to wish you all a good week. Any questions, let me know in the chat room. I'll have the normal weekly strategy report sent out to you by midday today, so have a good one.
Good morning, guys. Hope everyone had a good weekend and enjoyed the royal wedding. It seems as we are continuing, just wait for this chart just to load up a bit, just continuing the dollar strength as we just come to the high of the day on the dollar index here. Let's refresh this up a bit. I think you've got to be looking to see this continue for now. Obviously not to say there's not going to be any opportunity to go long. I just think you've got to favour the areas where it's going to be better to go short, continue the trend. Ideally, of course, a bit higher up if it was to come. The previous low of the day, which we have broken down here on the euro, was obviously a very good opportunity in the morning, having found initial support S1. Then you had the retest back, and what was the low? We see price then come back down, and we're just sort of finding a bit of support between S1 and S2 for now. I think if we were to retrace a bit higher, definitely an area to consider. What happened for most of the week last week was the mornings were relatively quiet, and then the dollar strength came into play. This morning we're already seeing the dollar strength come and euro dollar under pressure really from the get-go. So I'd favour the downside. If we were to perhaps get a break above this trend line where we got squeezed in, then yeah, sure, there's an opportunity to go long. But I would just prefer today to only be really looking to short the euro and also the pound here against the dollar. Similar sort of price action, having found support initially in the very early hours of the morning and then breaking through. Just finding a bit of support on S2. But already below there a couple of times. Just looking back at last week, so we've got 1, 2, 3, 4. So we get one more into the picture there. You can see we never finished below S2. So I'll just bear that in mind for the pound. You know, yes, on the 15th, so last Tuesday, we did get quite low down, only to finish, you know, a bit higher up and actually halfway between S2 and S1. So I'll just bear that in mind for the pound here. While favouring the short, it's got to be, in my opinion, a bit higher up. And profit expectations, if you were to look to go, say, short low of the day, you know, how much more are you really going to get out of this market? So a couple of levels to be aware of. Obviously, last week's lows, you've got the morning sort of support areas that we have then broken through. Key one really 134.41 on the futures. If we were to get back to there, you'd expect some sort of resistance to then come back down, but just be a bit cautious about how much more you're going to get out of this move. Not to say it can't go down further, but I would just be looking to take profit a bit sooner than if I was shorting higher up. Moving over to Aussie dollar, again, you know, you've got a bit of dollar strength in this market, but less directional than, say, the euro and the pound, and that here is going back to this whole month. Let me just move that above the camera so you can see that more clearly. Bit of a choppy range, direction, you know, perhaps a bit undecided. Overall, you know, if we just put this back on a weekly chart as well, you can see we're starting just to find a bit of consolidation. Those, you know, on the weeks here, you know, prices starting to bottom out perhaps. So for the Aussie dollar, in terms of looking for the dollar strength, euro and pound are the sort of the go-to there. Wouldn't mind a little range long for this market. You've got S1, you've got the low of yesterday. Prefer it obviously in an ideal world, R2 sorry, and then the high that we had back on Thursday. That would be the sort of trade that I would be preferring to go for there for the Aussie dollar. Just preferring, I think, the range for this market would be the main sort of thing to take from that. In terms of where we're trading right now, you could probably have a bit of an opportunity if we were to break above this trend here. Price just getting squeezed in a bit, so I would have that on the charts for Aussie dollar if we were to push on a tad. Having a look over dollar yen just to wrap up the currency pairs. Again, another morning where we've made a new high, and this market, I think, is along with the euro and pound pretty clear on the direction that we could be looking to go and trade. So got a couple support or potential support areas to be aware of if we were to come back down, and then obviously looking to go long. But again, similar with the pound, we're, you know, in this case above R2 and below S2 for cable. How much more can we really get? Just something to think about going forward. On the longer term chart, and let me just remove the pivots here. Got some key levels coming up, and I think one of the most important ones here that we had in the beginning of January, 11th of January, but also the second, so the first sort of trading day that we had of the year, not too far away. So I'll be getting your longer term charts up just in case we can get an extra push. Whether we get that today or not, I'd be pretty surprised. but we are just finding a bit of resistance back on the 18th of January's high as well for that pair. So dollar strength, I think, for against the yen, pound, and euro, Aussie dollar, maybe just play it a bit more of the range sort of trade going forward. Obviously, the FTSE helps with the weakness of the pound, push to those all-time highs. So I think looking to continue to go long is the sort of the play you want to be going for there. Over in the States, let me just get the pivots on here. You've got S&P, which gapped up quite nicely, so you've always got to think about is the possible gap fill in this market available. I think you probably would want to see R1 and maybe this trend go before sort of selling into that idea, and even then through there you've got some quite key resistance levels. So for opportunity wise, obviously the psychology of the gap fill will remain. I'm just not sure it'd be the most clean trade. You've got quite a bit of potential support to go through there. R1 trend line, the morning low, and then afternoon high as well, before obviously we gapped higher. So overall direction, I think you've got to prefer the upside, but last week, let's be honest, it was a choppy market. I think there's better opportunities elsewhere, and obviously that will go for the Nasdaq and the Dow as well. Moving over to oil, which was, I guess you could say, still kind of choppy as well, but I think you've got a sort of directional bias to prefer here. Trend line from last week and the week before has been respected well, so I'd still keep an eye on that. It might well be that it comes in later in the day. You had a bit of support. If I just bring this chart closer, you had a bit of support there late on Friday evening with this trend line potentially later on, so I'd have that one on as well. Couple of points to be aware of, that we're not too far away just before the pivot. Bit of resistance Friday afternoon, 71.61 as well, to have on the sort of the charts marked up. I would again prefer the upside. I keep an eye on Brent as well, which we did briefly get above that $80 back on Thursday, but since then we have we closed below it, so technically it could be quite interesting. And I think if Brent was to come down from these levels as well, it could help drag down crude as well. Quick look over at gold, which you can see with the dollar strengthening quite aggressively this morning, along with the the euro and pound is near its low of the day, or S1 in this case, S2 sorry, and would prefer the short. Let's just have a look and see if we can get any potential profit targets later on. So this trend line using the 16th and 17th low not too far away could be an opportunity for a bit of support, or you are actually looking for the breakdown. And if you're looking to short higher up, which I think is obviously always going to be the safer option in these kind of markets, previous lows of the days would really could really offer a decent opportunity there. I think the clearest sort of markets to to trade, especially if we're looking for a continuation of this dollar strength, is going to be the euro, pound, and gold. Equities in the US and oil, rather choppy last week. I prefer to look to the upside, but not necessarily favouring those over other markets. Aussie dollar, perhaps a bit more range bound. R1 or R2 and S1 look quite good with previous days' highs and lows. That trend line I would bear in mind as well. But equities gapping higher. Have a quick look over the DAX just to wrap this up, which you can see already has become quite choppy this morning, which is obviously what you would expect with that market. Any questions, as usual, please do get them in the chat, and if not, I'll be catching up with you guys throughout the day. Thank you.